Only silver and sugar are below their 1980 peak. So the obvious question is, why is that going on?
You recently wrote an article titled, "What if the silver price matched other asset gains from 1980?" So what are some of the explanations for why silver is still so undervalued relative to other commodities?
Yeah, that was a fun article for me to research and write. And basically what I did was I showed the peak in all asset prices in 1980. And the reason I showed the peak is because we had high inflation then, right? And everything was running up, not just gold and silver. So I wanted to look at where all asset prices have gone since their 1980 peak, because after 41 years, just on basic inflation, everything should be higher than it was then, even though that was a peak. And everything is, except silver. And sugar is also about at the same level as it was back in 1980. Gasoline is, or excuse me, oil, sorry, crude oil is also below its 1980 peak as of the date I did that chart last week. Everything else is higher. Only silver and sugar are below their 1980 peak. So the obvious question is, why is that going on? Now, the first obvious thing that many people will point to is manipulation. And of course, there is manipulation of gold and silver prices. However, gold is above its 1980 peak substantially. Only silver is not. So I don't think manipulation explains all of it. And the thing to keep in mind about manipulation, a lot of people are bringing that up in response to the article. And my response to that is, look, manipulations don't last forever. They always fail. You can go way back in history. The London gold pool back in the 1960s, they tried to fix and manage the price then. It did not work. So these things always fail. I think it'll fail again. There could be a number of reasons, but if you're manipulating for immoral reasons, you can't win in the end. You will lose. And so I do think that we will see higher gold and silver prices regardless of any manipulation. But we've been here before. I've pointed this out in other articles too, that, you know, back in the mid 1970s, they had raging inflation then, even higher than we do now. And yet gold and silver fell over a 2-year period of time in the mid 1970s. I think most, of your audience knows that. They fell over 40% over 2 years. And in silver's case, when it did eventually begin, when it bottomed, it stayed there for another 2 years before it started to move. But of course, we all know how that story ended. And I think it's similar today. Gold rose 7 times its price from its 1976 low. Silver rose 11 or 12x from its 1976 low. I think the catalysts are building steam today, much like they did back then. So, I'm preparing for, the next rise up in my gold and silver portfolio, because I think that's what's going to happen. Everything else is becoming overvalued now, and gold and silver are the only things, especially silver, that are undervalued. So I want to, why would I invest in something that's already run up a lot in price and is arguably in bubble territory? I'd rather invest in something that's undervalued, that has potential. And I think that changes when the mainstream comes back into this market. And I think they'll come back into it in a big way, because it'll be fear driving them, at least initially, into gold and silver.
So, Jeff, when you talk about the manipulation that is often brought up, there's a couple different types of manipulation that is often associated with gold and silver. There's the short-term spoofing, but do you think that the longer-term hold down of gold and silver, that type of longer-term manipulation, is harder to prove than the short-term spoofing?
Well, frankly, this is not an area I spend a lot of time in. I don't do a lot of research in that. What we do know is there is manipulation. We also, in gold and silver, but we also know there's manipulation in all assets. They're all manipulated. The degree to which really depends on how much the government is involved. So I don't spend a lot of time in that, frankly, because I take the old adage, only worry about the things you can control. And I can't control that. So, I can complain and moan and be frustrated and confused and angry and bitter at this, control to whatever extent it may be. But it doesn't do me a lot of good. I do believe that eventually all manipulations fail, and that if you're doing it for immoral reasons, you will be caught. You will be taken out, so to speak. You will not win. So the short-term stuff, yeah, it's frustrating, and it's good to see some of these guys getting fined. But of course, the fines are lower than what their profits were on the manipulation sometimes. So, that's all frustrating. But I would encourage people to really focus on what you can control. If you really believe that gold and silver are the only things that are manipulated by the government, and that you don't think it's going to end, I mean, would you really want to be in this market? For me, I don't believe that. And I do, even if that's true, I want to be here because I think it will end. It will fail. Manipulations fail. We've shown this throughout history. And so that's why I want to be in this market. The manipulation, the conspiracy stuff, it will end. It has to.
So, Jeff, is it possible that, when we're comparing to that 1980 spike high of $50, that was caused by the Hunt brothers squeezing it? Is that the right metric to be using? Or are there other examples of that type of scenario playing out in other goods?
That's a fair question. And some people point that out. Well, it was the Hunt brothers that drove silver up. That's actually not the case to a large extent. Yes, they did impact the price, but other entities besides us at Gold Silver have researched this and found that the Hunt brothers, what they did only added about $1 or so to the price of silver at the time. Think about it. Back in the 1980s, what did you have? You had literally every single asset was rising in price. Everything, not just silver, that they were buying, but also gold, all commodities. Lots of assets were rising in price back in the time. Gold and silver were responding to events. And keep in mind, by the way, why did the Hunt brothers buy so much silver? Because they were worried about the monetary system back then, the dollar. We have similar reasons to do that today, right? But here's another interesting tidbit. Back in I think it was 1976, and I forgive me if I don't have the exact date, but it was probably about 4 years before the big spike to $50 in silver. One of the Hunt brothers visited the pits at the COMEX back then. And back then it was open cry, right? It wasn't digital or computerized, and that was actually an open cry pit like you see in some movies like Trading Places, okay? It was like that. He walked into that commodity pit where they were trading silver and everything else, and the whole market stopped and looked back at him thinking, who is this guy that's buying all this silver? So in the mid 70s, they had already been buying a lot. He shows up at the COMEX in the open pit, and they all stop literally trading and turn around and look at this guy. Who is this crazy guy that is buying all this silver? So you would think in response to that the silver price would have jumped because he visited the actual pit and wanted to see the trading. And what did silver do? It went nowhere. It went nowhere for like 8 months after his visiting the COMEX. It went nowhere. So I don't think it was the Hunt brothers that impacted the price. And again, there's more we could talk about this. There's actual research on it. I don't think that's why the silver price spiked, because everything else spiked as well.